Hello, everyone. Welcome to Stock Talk Thursday. It is April 7th, and we are joining you at noon Central Time, hopefully catching you on your lunch break. We've changed that time so that this can be more interactive. Hopefully, more of you can participate and watch. We love to see your comments and questions. We had a good question last week about leaps, and so we were able to cover a little bit of that. So we'd love to do more of that. Both Facebook and YouTube version should be able to type in comments and questions there. So feel free to drop those in. All right, well, let's jump over to see what the market's doing, and then we'll hit what was hot and not last week and what is hot and not this week. So as you can see, we broke out of this downtrend. You guys already knew that, though. And we had started this cautious bull market. Now, I'm calling it a cautious bull market because it's like, well, there's sort of a lot of negative things going on in the world, and this was kind of surprising, this strong of a move out of the downtrend right here. So a cautious bull market, and what I mean by that is if you're trading, tread lightly. Just keep an eye on your position size. Don't get too carried away because we're still trying to figure out, is this for real or what's going on here? And as you can see, the market has already started to kind of question, how bullish it actually is. We had a pretty significant drop yesterday, and today we're not looking a whole lot better right now. Have a little bit of a bounce off the 50 EMA, so there is that, but I lost my train of thought. We have the bounce off the 50 EMA, but will that hold? That's kind of the question right now. So if we break the 50 EMA and start heading further down in this direction right here, we may very well be right back into a squirrel market and then potentially a downtrend and a bear market as well. So, I have this line right here, but then there's the question, well, should that line really be there? Let's save that right there. Oh, it put two lines. That's great. So this line right here, could that make sense? Could this just be part of a bigger downtrend? We'll have to wait and find out and see exactly what the market does. But right now, we are still in a bull market for now, but it's kind of been a tough one to work with. All right, let's jump into what was hot last week. So if you remember last week, we had LAC, Lithium Americas Corp. And they were really high. You can see that massive move up, and there was good news on this day for this stock based off of some moves that President Biden had done to really push forward lithium production in the United States to help catch up with China and other world powers that were ahead of us in that arena. But with anything that just shoots up a crazy amount, it only makes sense that it would have some resting, and that's what we've seen. So if you're asking me, I think this stock is still hot, although we have seen some pullback and we're looking for some deeper support. A stock can't just ride the 5 EMA forever. 5 EMA riding with a couple 10 EMA bounces, that's extremely hot, and that's usually short-lived. So we're down here now testing the 20 EMA to see, will that be more, support right there? And check this out. I kind of have this fascination with just drawing lines when I see a really good line potential right there. So there you go. There's a nice little line right there. We'll have to see if that line holds or if lithium decides to, break that and go down and test the 50 EMA. So right now, I still think it's more hot than not, but starting to cool off. So we'll have to see. Chewy was our not hot stock last week. There we go. Last week's not hot stock. And you can see it's still not hot. It hasn't done much. It's kind of gone sideways over the last week. But the overall, the big trend that you can see right here is still downtrending. The question now is going to be this line right here, right around $36. Will that hold? If it comes down here and tests that, will it hold again and bounce up? Or will it break down out of that? If we break down out of that line right there, that's going to be pretty significant. And we looked last week at where could that go, and we'd be looking down here probably in the low 20s as a potential target for Chewy. So not good for Chewy on that end. All right, let's jump right on over. Let's take a look at what is hot this week. So this week we've got Twitter. Now, let me get back to the daily chart. That would help to see what we're talking about right here. All right, so you see this massive gap up right here, okay? So Twitter has already been hot before this gap up, right? So we were down at about $32 a share, and then when we gapped, we were at about $39 a share. So pretty good percentage increase. It's about 20-ish% or so. And then with the total, with that gap and everything, we hit a high of about a 74% increase in the last month and a half. The low being February 24th, the start of the war. A lot of stocks gapped down and then moved up from there. And then the high right here. So what's going on with Twitter? Now some of you may already know this, reading the news or whatever, but Elon Musk decided he was going to buy over $3 billion worth of Twitter. So he just straight up bought 9.2% of the company. That's enough to be on the board of directors now as well. So he's going to be able to help make decisions for Twitter. He's going to be one of those voting members on the board. And he has stated that he's kind of on a mission to, create a platform or turn a platform into one that still supports the First Amendment, freedom of speech. So that's his mission right there. It's kind of unique to see, someone who wasn't even born in the United States come on over and be so gung-ho about the founding values of the United States. Many of you know that he's from South Africa. But anyways, that's just a little history on him. But he bought over $3 billion worth of Twitter. And what's going to happen when you put in a massive order like that? Well, supply and demand, right? So, the supply is going to really diminish, but the demand is not necessarily changing a whole lot. So that means that the price is going to jump up. And that was a 22% gap up just from, Friday, the 1st to the 4th. Yeah, so over the weekend, massive move up there. Moved up the next day as well. I mean, it opened up higher and then moved down, but it closed higher. It was only today that it really started to give back some of that move, but we're kind of right there still at the gap line. And that's a pretty significant line. And that gap line tends to coincide right along with the 5 EMA. So 5 EMAs are kind of, if you want to find a hot stock, find a stock that's bouncing off the 5 EMA, right? Or not hot stock, find one that's bouncing down off the 5 EMA. Back in here, Twitter was not hot. In fact, I think Twitter might have been one of our not hot stocks several weeks ago, maybe a couple months ago. I don't remember for sure. But how interesting is that? If it was one of our not hot stocks and then jumps right up on the board to our hot stock. So we'll have to see what Twitter does. If Twitter bounces off the 5 EMA here and respects this gap line, that would continue to show how bullish it is and how hot that is. If it starts breaking down and start coming down, then maybe, it was overshot a little bit and it's coming back down to reality. But that is Twitter, and that is why Twitter is our hot stock of the week. Let's take a look at what is our not hot stock of the week. And for that, we have Fubo TV. All right. So Fubo, they broadcast a lot of sports, a lot of soccer, where the rest of the world calls it football. So, Fubo, football kind of goes together, right? But they have not been doing well. Look at this action down here. Remember how we just talked about, it's not hot when it's getting pushed down by the 5 EMA. Look how many times it's happened here, getting pushed down by the 5 EMA. And again, for those that don't know, that's my dashed green line right there. A couple times it came up, bounced down off the 10 or maybe even the 20. Seems like it is not stopped moving down, but it has kind of cooled off on how quickly it is moving down, kind of rounding out. So there could be bullish potential in the future, but we are not there yet. We need to see several more things happen with Fubo before we can go ahead and get bullish on that. just some quick stats on Fubo for you here. From back here in November, we had a drop now, and it's worth about 1/6 of what it was back in November. So that's a pretty big drop. And we go back here and look at, well, where were we? Up here in late 2020, and it's worth 1/10, actually less than 1/10 now. Yesterday it was 1/10 when I did my research. Today it's moved down even more and is worth less than 1/10. So what is going on with that? Why is Fubo just falling out like nothing can hold it up? What's going on here? Well, it's a TV provider, and like many other TV providers, Netflix included, they did very well during the pandemic because, well, everyone's at home and a lot of people are just watching TV. So you have the pandemic that is kind of hopefully towards the end phases. At least things are opening up. People are starting to get back to work, all that stuff. And naturally, a lot of the gains that TV providers made would be given back. And you can see that Fubo's almost right back down to where they were. They are back down to where they were pre-pandemic levels right in here. So, it looks like the market thinks that really, they're only like a $5 to $10 stock. They should never really been up at $50, $60 a share. And they're showing it here with getting pushed down. And right now we're looking at a 3-year weekly chart. And again, what I just mentioned on the 5 EMA holds true on the weekly chart as well. You can see this 5-period EMA. So now this would be like counting up 5-week candles. And it's just getting pushed down by the 5 EMA on the weekly chart. So same thing holds true there. Now, if Fubo could turn around, it's a cheap stock and there could be opportunities there. Remember, it's not about the dollar amount that a stock moves. It's really more about the percentage that a stock moves. Give you an example here. If you were to buy this stock at $5 and you sell it at $6, you can't look at that as like, oh, that's only $1 gain per share. No, that's a 20% gain per share on a stock trade. It's pretty good. So if we could see, let's go back to a daily chart, and again, 6 months of total time here. If we could see this thing start turning around and start uptrending, there could be some potential within Fubo. But right now, that is not something we are looking at. However, if you were to use options in the proper way, there are opportunities out there within Fubo. There's ways to make money on this when the chart's going down. And we go back here to Twitter. I see this right here, and there's a very specific advanced strategy that we teach here at Tradeway where you can make money off of this. The beginning trader is going to probably have to wait for a new pattern to develop. But, some advanced traders are already seeing an advanced pattern that is working. It's not the prettiest right now. It was looking prettier yesterday, but it still is working. And so there's definitely opportunities in crazy moves like what Twitter has made, or even Fubo, where it's just falling like a rock and there's not much holding it up. So that is our hot stock and not hot stock of the week. A couple things I want to let you know about. Tomorrow and Friday, we are teaching a step 4 class, and that will be going over debit spreads and covered calls, a little bit of credit spreads too. So if you are already a Tradeway Top Gun member or Master Trader or Elite Trader member, feel free to join us there. You can sign up by going to events@tradeway.com. Let me throw that in the comments right here. Events@tradeway.com. So you can just email that email right there, and we can get you all signed up and everything, get you the link you need for that Step 4 course. For those of you that are not part of our program yet, I want to ask you a couple questions. Did you know that you can make over 100% ROI on a trade in a very short amount of time? I mean, anything in theory is possible, but I mean, in reality, there's the potential of making over 100% ROI in literally just a few days. With a specific trade that we teach in our Step 4 class. So if that excites you, feel free to check us out. You can email support@tradeway.com. I'll put that in here as well if I can find my mouse. There we go. support@tradeway.com. We can get you information on how you can learn more about our program and how we teach these strategies. And the other strategy, cover calls, is a pretty cool strategy as well. It's one of the safest option strategies out there. And essentially, you can get paid to own stock. Yep. For example, you go buy 100 shares or so of Fubo right here that we're just looking at. You could actually get paid to own the stock. So, yeah, Adam, I see it right there. Been there, done that, 100% ROI. That's great. Yeah. So you've seen what the power of options can do. And they're called options because there's so many options. You can mix and match these things, buy, sell, do whatever kind of spread you want to tailor your personality, your trading style, your lifestyle. So check those things out. If you're a student with us already, again, events@tradeway.com to join, or if you're not one of our students yet, get more information at support@tradeway.com. That's going to wrap it up for today. Look forward to seeing you guys next week for what is hot and what's not on Stock Talk Thursday. We'll see you guys later.